Elon Musk is causing trouble again. This time it's not about tweeting, it's about price cuts with Tesla. As you can see here, I posted that one in the Patreon community. Tesla slashes prices of the best-selling models in key markets. So we knew about China already, but now it's also in Germany and the United States. And while this might be bad news for shareholders, but more about this in a minute, it's certainly causing trouble for some of the competitors. In China, I would have said that this is mainly maybe about BYD and Xiaopeng. So they might be facing some margin issues in the future there and some more competition. But anyways, maybe on a more macro level, my first reaction to that this morning on Twitter, and by the way, you can go there and follow me with my handle _mm85 on Twitter. And I basically mentioned like Elon is signaling deflation here. So in a macrocosmos of things here, this is about that material prices, the input material prices are coming down rapidly, and so it seems Tesla might be able to forward some of these cost declines to their customers. And I found this chart, which is actually by Tesla Facts, another Twitter account, which I found quite interesting. Because oftentimes it feels like these price cuts are somewhat extraordinary in terms of that, Tesla is there scrambling for demand. However, if you look at where the price points were going back in January 2020, that must be, right, that's more than 2 years ago. You see this green line here. This is where the prices in China have been going, coming down from more than 300,000 to 250,000, only to increase actually from summer 2021 again. And now those prices are getting slashed back down actually to the levels that would kind of indicate an incremental price deceleration over time. If there wouldn't have been an inflation issue, right? And so I mentioned yesterday how it seems like the CPI is rolling over in the US and has peaked actually right in the summer when, this also was the peak for Tesla prices, and now it's coming down there. So maybe Elon is here also sending a message, and that was similar to a previous message that he has sent about job cuts, right? He slashed jobs at Twitter and showed that this company can be run with maybe basically like 1/3 of the staff, right? And then lots of tech companies actually followed in that trend. So we'll see whether or not many companies will actually also follow here with Tesla and signal that the inflated prices are over, maybe due to many factors that is not the topic of this video. Anyways, I found that one quite interesting to see that this, as I've also outlined on this channel many times, is actually where I see the mission of Tesla, bringing down prices over time for EVs. And I was rather disappointed by previous mentions of Elon Musk in the earnings call where he said like, we are not going to build a cheaper model. But it seems like increasingly to me that with the Model 3 in particular, they're trying to drive down costs as much as they can. Also, an interesting take here. These are some of the first voices out there that I see really doing a bit of maths, and I'm not judging here whether or not this calculation is correct or not. However, what he's indicating here is basically that what would be the biggest question to answer, and we have to wait for the earnings call for Tesla to get certainty on that, but maybe all of the price decreases that we're seeing right now are actually also cost decreases that Tesla really has gained so far. So the cost to produce and deliver a Model 3 and Model Y in 2019 was around about 35 to 36,000 US dollars. It's now 30,000 to 31,000 US dollars. So that's a rough cut of 5,000 US dollars, right? And here you can see that between 2019 and 2023, so in the same time span, there has been a big increase in the price of that good. So basically it just makes a lot of sense to bring down those prices, right? So this might be an indication that maybe it's not screwing Tesla's margins as much as some of the commentators out there are thinking in the first place. We'll see. Once again, this is not with certainty, but we'll see what will be the actual numbers in the next earnings call. What it does do for sure is it is a huge demand trigger here. This is the Tesla Model Y searches spiking in Germany today. And as you can imagine, lots of these searches will translate into orders for Tesla cars there in Germany. So Tesla currently much in the news with a negativity bias here in terms of the price cuts. But as I pointed out in this video, I think we need to wait a little bit to see the actual numbers here. And it is a certain scenario in which Tesla will not be impacted as much on the bottom line, but rather on the top line, grow revenues and making sure that they are, achieving their growth targets, even maybe so in a recessionary environment in most places in the world, frankly. So let's see how that will pan out. Let me know your comments below, whether or not you think Tesla is forced to do these price cuts, or whether or not these things may actually be working out in a good way for Tesla ultimately. Thank you guys for watching. See you in the next video.